Hey guys, welcome to this video. My name is John Watts. I'm a consumer protection lawyer. I want to talk with you about something that I think will be very important, particularly in the coming months here. And that is, what if you settle debt? Are there tax consequences? Now, this could be you get a collection letter in the mail. It could be you get sued and then you settle by paying some money to the original creditor or the debt collector. What are the tax consequences? And certainly there are exceptions and you have to figure this out on your own, but let me just give you the general guidelines just so you can have it in your mind and then you can ask the right questions. So there's a simple concept that says if there has been forgiven debt, so debt that you owed but has been forgiven, then that's considered taxable income to you. You get a 1099. The theory behind this is, and let me give you an example. Let's say you loan me $5,000. Well, I literally have $5,000 in cash. Do I pay taxes on that? Well, the answer is no, because that's money I borrowed. And I'm going to repay that money with $5,000 plus interest with after tax dollars. So there's no problem. But what if that $5,000 you loan me, I never pay it back? Or I pay you $1,000 or $2,000 or $3,000. So we'll just go with three. I pay you $3,000. Well, what about the other two? Well, if you and I settled where I say, I'm going to pay you $3,000 and you say, fine, we're done with the debt. Well, then you have forgiven me $2,000. So normally the next January, I would get a 1099 from you if you were a bank or a financial company. And you would say, hey, there's $2,000 in income for John Watts. And then I have to go, either if I'm doing my taxes on my own or take it to my tax preparer and say, hey, I got this 1099. And so how do you avoid this? Well, to some extent, you cannot avoid it. If they really have forgiven debt, so you owed $5,000, you paid three, so they forgave $2,000, then they're supposed to notify the IRS, really any amount over, I think it's $600. So they're supposed to do that. Now, what about if you're receiving this? Well, there's an exception for if you are insolvent. And you can look this up, the IRS, you can read it. Certainly any tax preparer, particularly a CPA, would understand this. The basic idea is if your debts exceed your assets. Okay, so I owe $300,000 and I have $100,000 in assets. Well, then I may be considered insolvent. Obviously, you got to check the current regulations and all that. And that may then be something where I do not have to pay taxes on it. Again, talk with somebody who does taxes. The other idea is if this is disputed debt, so debt that's disputed in good faith, then the IRS may say, well, even though there's this 1099, you do not have to pay taxes on this. Now, let me give you sort of two examples, one where it's kind of hard to argue this and one where it's easy. It's hard to argue if somebody says you owe $5,000 and you pay them three, it sure looks like you were forgiven $2,000 of debt. But what if you're sued by a debt buyer, a debt collector, and they sue you for $5,000 and you pay them zero, nothing? Well, can they then say, well, we forgave you $5,000 worth of debt? It's like, what are you talking about? You didn't forgive me anything. I never owed it. So my practice when I'm representing clients is if we're dealing with a debt buyer, we don't pay them any money. Now, we get them to, if they want to settle, to dismiss the case with prejudice, which means the case is over, it's done, it's finished, and we never paid them a penny. Well, I've not had a problem before, but if I did, I certainly would talk to the tax preparer, CPA, whoever, and say, look, here's the deal. I guess my client got sued for $5,000. We paid zero. There wasn't any forgiveness. They just gave up. If we really owed the money, why would they give up before trial and take zero? Okay. Now, I've had these debt buyers say to me, well, John, $5,000, throw us a bone, pay us $500, $1,000. Well, see, if we do that, I think there's a pretty good argument that maybe they forgave us $4,000 in debt, which would then be taxes. So, and let me just take that example. If if I owe five and I pay one, it's not that I pay $4,000 in taxes, it's I pay taxes on $4,000 of income, unless there's some exemption. So I just want you to be aware of this. You'll start getting settlement letters, particularly during tax refund season, because they know that, for some of us, this is when we get our money in. And so, these old creditors or debt collectors are saying, hey, pay me, I'll give you a great deal. They also file a whole bunch of lawsuits and thinking, hey, you're going to have money. So it's fine to settle. You have to use your own judgment. Is this something I owe? Is this a good deal? What are the consequences with credit reporting? But I also want you to always understand there may be tax consequences, and you need to figure that out. Either get with a lawyer in your state, get with the CPA, get with somebody and figure out, is this going to happen? Because here's what I don't want you to do. And I've had people come to me, I've never met them before. They come to me and say, hey, last year there was a $25,000 debt, and they gave me this fantastic deal. Maybe it was too old to sue, but they said they would, let me settle for $5,000. And that's wonderful. I'm like, yeah, but you just got a $20,000 1099, didn't you? They're like, yeah. And so that may cost, depending on their tax bracket, $5,000, $6,000, $7,000 in actual money. So just be aware of it. I'm not saying you shouldn't settle, but I'm saying you need to be aware of it. Go in with your eyes wide open so you know what's going to happen. Tax consequences, other videos we've talked about, credit reporting. Just make sure that you have the knowledge, and then you can make a good decision. So hope this is helpful, and I'll talk to you guys later. Okay, bye-bye.